So glad you are with us on Wells of Wealth. Brad Johansen along with Don Chamberlin, CEO and DC Chamberlin, the Chief Financial Planning Officer of Chamberlin Group. Guys, it is a pleasure to kick this program off. Thanks for being with us.
Oh, we're so excited to do this, Brad, and especially with you, who's had such a great career in broadcasting. We're very honored to have you as our host.
I appreciate that. I am humbled by that. Looking forward to the educational process that is the Wells of Wealth. I can't begin without talking about what you guys are wanting to get your hands on. This is the Wells of Wealth book that Don has put together. We're going to lead you through this, which is an entertaining read for a lot of people, and a simplified version of what seems to be so complicated in trying to figure out how to retire. Take me why you went into the Wells of Wealth.
Well, it's kind of been a long process, Brad. Actually, it started in 2001 after the market started crashing. If you remember that dot-com bubble.
I remember.
Yeah. Well, I was a stockbroker then. We've had our company now for 24 years. But that's when I left being a stockbroker, which I was managing about 50 brokers at that time, and I decided to actually start my own business, go out on my own. It was just me, I felt like I needed to protect people's money better, and over the years, we put together all these different ideas and processes and techniques and tactics, and it's all now in this book. It took 24 years to figure all this out.
Yeah, that's a process, and it is a journey, as we talk about. Leading into that, can we begin chapter 1?
Yeah, let's start.
I think it's probably a decent place to start. When we go into this, we're taking back, if you say 24 years to get this whole thing started, we're going back to, and shoot, this might be a commercial that you would remember back in the day for those of you who got milk. The idea of this guy's trying to win a game show.
Right.
And he gets a question, and he's got peanut butter in his mouth, and you get the question, you got milk, and you're just missing that one ingredient to get there, and he can't win. I think for a lot of us going into the retirement game, we feel like we can't win because we're missing that main ingredient. A lot of people, Don, DC, will walk into an advisor's office and say, average rate of return. What's your average rate of return? Do you have this for me, and how do I get it to the point of where I need to be? Can you lead me into whether this is the right question or whether I'm a little off in trying to get to the average rate of return?
Well, it's interesting because Wall Street would like to think this is an average rate of return that you're going to be getting. But we do a lot of educational classes, both online and in the communities where we are. And what I always write on the board is -30 plus 43 equals 0. Now think about that. Maybe some of our viewers would want to write that down real quick if they have a pen handy. -30 plus 43 equals 0. And what that is if you lose 30% in the market or on any other investment, you need a 43% gain just to get back to even.
Yeah.
Right? So the averages don't always work in our favor because it takes a lot longer to get your money back.
Okay, so the longer, and we started with 24 years. DC, if I look at this, if I've got 24 years while I'm working to create that upside one more time, I'm not so worried about it. The runway shortens now as we get into retirement. Why is it so dangerous for that need to get back to 43% just to get to even?
Yeah, and I think it's just because you don't have as much time, right? Like you're in the accumulation phase heading up to retirement, and you're getting closer and closer. Like if you take on a big loss like that requires an asymmetrical return to get you back to even, you're going to be in a spot where you might have to think about staying in retirement longer. And so most people, when they get to the end of the rope, they're like, I want to be done. I even run into a lot of people who are like, hey, tell me when I can retire as soon as possible. And the only way to do that is to confidently have a plan to kind of address this asymmetrical math that we have, where like if you lose 30%, you need 43 to get back to even. And if you lose even more, it gets even worse. The divide becomes even greater.
This leads into risk. And what you have done, Don, and I appreciate this, is that you have now put together tools that make it a little easier for people to understand. I want to put this up on the screen for you because I like quizzes that you can't fail.
Right.
This is one you can't fail. So scan the QR code that's on your screen, or you can go to 4riskquiz.com. The idea is, do you have an understanding of what kind of risk you are in, how much you're taking, and whether your portfolio is matching part of that risk? I'll leave that up before we go to break to give you an idea, to user-friendly, very simple, not a sales tool. It's an understanding of where am I? And do I have an understanding of the amount of risk that I'm taking? When I ask that question, Don, for the most part, are people pretty far off from what they're in and the amount of risk that they think they're taking?
That's what we find a lot of times, because they assume that they're going for full growth, and they do that. There's a difference between accumulation and decumulation. So when you get closer to retirement, you have to think more about the decumulation phase of retirement instead of the accumulation phase. People have been used to saving money in a certain way and investing it for large returns over time. And this has been great for the current generations, the baby boomers, the Gen Xers, because the market's gone up since 2009, right?
No question. We've had a great run.
But what happens when you get into retirement and maybe right before you're ready to retire, the market goes down? Or right after you retire, the market goes down? What are you thinking? Before retirement, what would you be thinking, Brad, if before retirement the market went down?
I feel like I'm in a danger zone. If my runway starts to get short, I want my risk to be shortened. And so I don't want a 2001. I don't want a 2008 when I'm making this decision.
Right.
But as you said, for 30, 40 years, I've been used to that risk because I'm growing, right?
Yeah. The biggest fear right there is I'm afraid I got to work longer than I wanted to.
Amen.
Right? Or after retirement, now I'm afraid I got to go back to work. And we really don't want anyone who's worked their whole life to have to feel that way. That's why what we want to do is to have between the accumulation phase and the decumulation phase, we want to have a planning phase. This planning phase gets you set up for heading into the decumulation phase so that if something happens, if there's higher inflation, if the tax rates go way up, if we have a bad economy, you are prepared for that.
And the idea is for education. It is to put the book in your hands. It is a user's guide, The Wells of Wealth. You get that by calling the number in a 20-minute phone call with a financial educator to put this in your hands. Say, I'd like a copy of the book, and I'd like to see whether or not this is a fit for me. 866-479-8797. If you're moving towards retirement, why would you wait? Time is your greatest asset. Make the phone call now. 866-479-8797. We'll be right back.
Good morning, Ben.
Good morning, Ben. Hey, birthday party for Carol and 5. Happy birthday to you.
Good morning, Ben. Happy Monday.
Daryl's birthday, be there every square. Happy birthday to you. As you can see from our quarterly report on slide number 62, we're trending in the right direction. All signs point to a very positive outlook for the next several years. If you peel back the onion...
anything to add?
The work never seems to end until the day it finally does. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
So glad you're with us on Wells of Wealth. Brad Johansen along with Don Chamberlin, DC Chamberlin with Chamberlin Group. And we're talking about the book that you want to read because it is, I would say, a user's guide as you try and move through retirement. Gentlemen, nice to have you with us.
Thank you.
We talked about risk in the beginning. I think we're going to continue on that because, DC, if I lead into sequence of returns, and I'm going back to the beginning of this book in 2001, it leads us back to part of that. Why is sequence of returns so important when we're talking retirement?
Yeah, and that's a good question. I mean, it's one of the most important things as we get into that decumulation phase. As you go through the preparation phase, like where you kind of get prepared, and this is really about what we talked about previously, where you have your portfolio. You might even be the same risk tolerance heading into retirement. You're not changing that at all, but it's kind of about this new math that occurs with the sequence of returns risk. And we have a slide on this too that we can go through that would kind of show you this. But essentially, when you have different types of math that occur like this, like you're taking loss when you're taking money out of your portfolio, it's harder to get back to even. This goes back to the you lose 30%, it takes 40%. To get back to even. So if you're taking money out, you're like compounding that. If you lose 50%, it takes 100% to get back even. And you have a situation where they have a lot more money left over because they started with bigger returns on the front end. So those are the things that I think are just worth kind of looking into and addressing, and you have to have a good solution to do that.
Okay, so I want safe money, Don. I want to figure out how to safely have money. If the market is changing every 2 years, and recency bias will tell us, well, it doesn't do that. We've had a nice run. We've had 3 consecutive years of double-digit gains. Now 2026 has been a little bit more volatile, but how do I create safe money if I'm worried about these sequence of returns?
Well, we do that through the Wells of Wealth, and we'll get into a lot more detail in this as we go through the different programs that we're going to do over the next several weeks. But it's called time segmentation of money. So we segment different parts of our portfolio so that we set aside enough income for the first 7 to 10 years of retirement. So if the market goes down or inflation goes up, we still have income that's coming out that's not affected by everything that's around us, right? And that example that DC just talked about, it's very interesting because in the book, it's 2 sisters, and they basically have the same amount of money, $1 million.
Yeah.
They're taking out $50,000 a year, and they have very different results because their returns are flipped opposite. They're real life returns, but what ends up happening is one after the whole time after 25 years has $2 million, and the other one runs out of money after 18 years of retirement. Why does that happen? Because in the beginning years, the bad luck sister ends up having very bad returns, and it destroys her portfolio by the end of her lifetime when she needs that income. The other sister has good returns at the beginning, and that's how she has the $2 million. So it's like gambling, kind of, right?
Yeah.
Are you going to be the one that runs out of money? Or are you going to be the one that has a lot of money at the end? And what we really want to do is make sure you're not the one that runs out of money by doing this planning and using the Wealth of Wells.
Again, we have 4riskquiz.com that's up on your screen. You can scan the QR code that is here, taking you through just a few minutes to get an understanding of what your risk level is. What you guys are saying is, I've got 2 people who do things exactly the same way.
Yep.
And my timing's off. And my goodness, we hear this all the time. I want to figure out how to time the market, which is impossible. And yet people want to find the right timing for all of this. Am I at the mercy, DC, of the market? Or do I go back to what you said, Don, when we say, you know what, I'm I'm in accumulation mode or decumulation or distribution mode. Why is what you guys are doing, specializing on this decumulation distribution phase, so different when I feel like I'm at the mercy of the market?
Yeah, and I think the big thing here to think about is like, do you want to be at the mercy of the market, right? When you're accumulating, you're working, you kind of want to have a peaceful retirement. So you could be at the mercy of the market, but then what happens if you have early 2000s where the market drops 3 years in a row? Now you got to go back to work maybe if you're at the mercy of the market. So putting a plan in place that addresses that ensures that you can retire on time and ensures that you can be in a spot where you're happy and enjoying your retirement earlier.
Don, I want to talk about because I've talked about the book, The Wells of Wealth, which is what we're basing all of these on. And this is just beginning the first chapter of 25 years worth of you putting this whole together,
right,
with the understanding of all of this changes. And we have to adjust to some of the changes. Tell me about the phone call that you're offering as we put this out to viewers who are saying, that's me. I'm worried about the sequence of returns. I'm not sure my risk is at this. Tell me what people are going through with the phone calls that we're offering for them and a chance to get this book as well.
And it is the Wells of Wealth, by the way. I said wealth of wells earlier.
It happens as we put it through.
That's what it is. I often make that mistake, and I probably will in some of the other episodes of this. But so what we've decided to do is to make it easy for people, because we're focusing on education. We want you to get more education on retirement and what you need to do as a family in your retirement. So in order to do that, we've set up retirement educators. These are people who are certified. They're certified as financial education instructors. And what they will do is they'll take your phone call when you set that up with them, and they will then get you the book. You can have questions answered about the show, about your particular situation, whatever you want. But they're purely retirement educators. They're not licensed to sell any products or do any financial planning for you. They're there to help you and educate you on which direction you want to go next.
The idea is, if I'm doing this for the first time, how many things have you done for the first time that you do perfectly? This is the first time for the next 30 years of your retirement. Wouldn't you like some help? 866-479-8797. You can scan the QR code for the appointment. It is a 20-minute phone call with a retirement educator. Man, I could use some education, and I don't know about you, but the idea is, if you want to get it right for 30 years, wouldn't you want a little bit of help? Make the phone call. Let's put this in your hands, the Wells of Wealth, and let's put a program together to put together your complimentary written financial plan. Would you like to do it right? We're happy to help. Be right back.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Hey, we are glad you're with us. Brad Johansen along with Don and DC Chamberlin, Chamberlin Group, and the Wells of Wealth System. It is the book that took nearly 25 years for Don to put together, and well worth it. We're giving it away to you, taking you through the idea of kind of a user's guide to get to retirement the right way. You hope you have a good retirement, and we'll say this all the time, hope is not a plan. So I want to talk about, DC, it lead me into planning versus hoping, because we've been in the accumulation stage. Man, I hope I get to the right number. Getting to the number probably isn't the plan that we're looking for to make sure this lasts.
That's correct. Yeah. And I think the main thing to me is like, you can have a portfolio, you can have a diversified portfolio that handles risk very well, right? And it's in a good position. And your hope can be that you draw it down and you don't encounter the lost decade at the start of your retirement. The fact of the matter is people did encounter that, right? They had, the early 2000s and then 2008 with the financial crisis. If that comes along again and you have a moderate portfolio that you're just drawing off of, it's in danger of you running out of money earlier than you anticipated if you're just taking a normal rate of return or normal draw off of your portfolio. So you can't just hope, what we try to do is make sure that we account for things like that. And if you can, your Monte Carlo, like your evaluation of like how your plan is doing and your probability of success can be really strong, right? But if we can make it just that much stronger and insulated from the bigger risks that could come up, isn't that something worth thinking about so that you can sleep well at night and enjoy your retirement?
The answer is yes. 4riskquiz.com is up on the screen. Scan the QR code that we have. This is for you to assess where we are. Don, biggest mistake. And we probably have a long list. So I don't know whether you can quantify biggest mistake between saving, which I've done for 40 years, and now moving into spending. What do you see most often from people?
People do relatively nothing, right? So they just think the market's going great. It's going to continue to do that. Maybe I'll just put some more money in bonds. Well, does that really work? Like in 2022, what happened was the stock market was down 18%, the bond market was down 18%. Is that going to happen again sometime? I hope not, but it certainly could. So the idea is you need to be fully prepared, and we'll get into the 7 pillars of holistic planning as well throughout these different shows that we do, Brad.
Yeah.
But there's 7 different elements you want to be prepared for. And we're going to talk about that in some more detail. Those are all things that we pull together in the Wells of Wealth. I said it right this time.
Fantastic.
The Wells of Wealth whole system that we put together here.
Yeah.
So it's being prepared. The biggest mistake is not being prepared and saying, oh, I should have done something. Now we have inflation. Like a few years ago, we started to have inflation. We were not prepared for that. We had such low inflation for so many years. People were shocked, especially at the gas pump, right? So that could happen again. Many of us remember back in the 80s when it was very, very high inflation, right? If we had that again, what's going to happen to your plan if you don't do planning ahead of time?
I want to get to proper planning. And how does that protect against both loss and the sequence risk that we talked about before, DC?
Yeah, and I think, again, with the Wells of Wealth strategy, like if you put this in place, the idea is we're really segmenting things out. Instead of taking that normal portfolio, it might be a moderate portfolio, it's saying we break that apart and we look at it as 2 different parts. We want to look at money that's like growth money for a longer term, and we want to look at money that's more insulated, that can get us through the ups and the downs and the day-to-day volatility so that we're prepared.
Do we have a Wells of Wealth graphic that we can talk about some of that as well, DC?
I think there is one, yeah. So that would be a kind of a useful thing. So the idea here is you kind of flow from left to right. Your liquid well, that is where you keep money at the bank. You want to have an emergency fund there. You want to have money that you need for the next year's worth of things that could come up. Then this is where things kind of differ. Like everybody has that anyways today to some extent. This is where things really differ from your traditional approach in that instead of having your whole portfolio as one, you have a conservative part of your portfolio, and you have a growth part. And the growth part really has a longer time horizon on it. So we're really thinking, hey, this is for 10 years from now. So we don't get too worried about the ups and downs of the market. The market has a much higher probability of doing better over the long run if we give it a longer time horizon. That's the whole concept behind this Wells of Wealth strategy.
Limited time, Don. What do I do now? We set up the what ifs. What would you ask someone to do right now watching the program?
I would say learn more about what you need to do for you and your family in retirement. Educate yourself on the best solutions for you. That's why we do these programs, to educate you. The book is a resource. Our website is a resource. We have something like 40 videos or 50 videos on there where you can learn. There's a learning center if you go to our website, and you can learn that. We also have a lot of online courses. We have local courses as well that we're doing. But education is the key, because you do want to protect yourself, and the planning part is where you're going to do that for you and your family.
Well, let's help you plan. Let's put the book in your hand as well. Wells of Wealth is yours. You can call the number 866-479-8797. 20-minute phone call with a retirement educator that will take you. The idea is, how do I get smarter? How do I figure this out that it's going to last? We're going to continue to do that for you. Can't wait to see you in the office. Make the phone call for you. And we'll see you right back here next time on Wells of Wealth.